This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Hello, this is Hall Martin with Investor Connect. Today we're here with Brian Axelrad of Beyond Capital. Brian, thank you for joining us.
Thanks for having me.
Can you tell us how you got into early stage investing?
Sure. So for me, it's been kind of an interest for a long time, actually. When I was growing up, I had my parents put me to work one summer selling poker cards it was just before the 1992 presidential election. And these were poker cards that were election themed. So Bill Clinton was like the king and Hillary Clinton was the queen. And I think Ross Perot might have been like on the Joker card or something like that. So I must have been 11 at the time. And that was sort of my first introduction to startups and entrepreneurship. But that was just sort of a theme that always kind of carried through for me. Then I went to law school. I spent a summer in Silicon Valley working for a law firm out there, Wilson Sonsini, that does a lot of work with startups, and just kind of captured the bug, I think. I stayed in Chicago after law school, but went to business school on the weekends, not necessarily always wanting to be a lawyer, though that's still part of what I do, but wanting to really get into venture capital. And so leaving the law firm I was at the time, around the time that I was finishing business school in 2009, great time to be a career switching lawyer, of course, getting into venture capital and working with a couple of guys who actually were starting a venture capital firm focused on what they called the kid-centric market, which was really anything focused on kids. So healthcare companies, education companies, and those were two sectors that I focused on quite a bit. And that wasn't necessarily related to impact investing, which is sort of the next direction that my career took. But the businesses that we were looking at very much had sort of a social mission to them because they dealt with kids and typically trying to provide products and services to kids or parents, educators, healthcare professionals to help kids. And so that was sort of my kind of gradual path into early stage investing and in particular impact investing. And it was just, I describe it in a way that sounds very linear, but in fact it was anything but. Particularly coming out of business school in 2009 it was a lot of knocking on doors and trying to figure out going from one thing to the next and just finding ways to get involved, which is really the best way to get into early stage or getting into startups is really just sort of networking and talking to people and figuring out what's out there and trying to find something that's a fit. So that was sort of my journey.
So you're now the CIO of Beyond Capital. Can you tell us what the focus of the fund there is?
Yeah, absolutely. So Beyond Capital Fund invests in early stage startups, social enterprises in India and East Africa. Historically, our industries of focus were water, healthcare, waste and sanitation, and energy. We've also more recently expanded that to include financial technology and agriculture, specifically as it relates to the issue areas of financial inclusion and food security. We've also sort of migrated a little bit out of some of the earlier sectors. In particular, we've sort of moved a little bit away from water as an industry as well as waste and sanitation. We have investments in those sectors. First investment in 2009 was in a water distribution business in India. Our first investment in East Africa was in a sanitation business called Sanergy in Kenya. We found that the business models in those sectors are pretty difficult. So we still look at those sectors, but we've moved a little bit more towards healthcare, which we've invested in sort of from the beginning and has always been sort of a fruitful area of investments for us. And more recently, as it relates to financial technologies and agriculture as sectors where we're seeing a tremendous amount of activity. And then I'd mentioned energy. That's an area where we have sort of found an investment in a company called Frontier Markets, which I think of more as last mile distribution as far as what the business does. But it does sell renewable energy products. So it's sort of an energy company, but we found that the energy space, particularly for what we focus on, which I'll talk a little bit more in a second, can be difficult because we're not necessarily looking at clean technology or sustainable technology because the businesses we're focused on are providing basic goods and services to households and communities that don't have access to very basic goods and services. So like I said, healthcare, water, sanitation, or financial inclusion or food security as issue areas. So we found that energy is an interesting one. Oftentimes it's capital intensive or people are still thinking about maybe earlier generation energy products. And so it's a challenge to kind of thread that needle when we're finding businesses in that regard. But we're typically looking for businesses that are what people would refer to as social enterprises, businesses that are trying to do good while also making a profit. We look at businesses sort of with a couple of screens. First, they have to fit our profile, which means geographically India or East Africa. They have to fit the sectors of focus for us, which I mentioned earlier. And that's kind of our impact profile screen. Make sure that they're sort of fitting what we're doing along with providing access to basic goods and services. Then we look at the business from a financial perspective and make sure that it's what we would think of as a financially viable and sustainable business. And then we'll circle back to evaluating the impact if we felt confident that it's both within our profile for an investment and it meets sort of the financial hurdles that we're looking to find.
And how far along does a business have to be a good fit for your impact investors? Do they have to be generating revenue, or can you do pre-revenue? Where is the sweet spot for you guys to enter?
So we generally don't look at pre-revenue. We want to see a business that's had some revenue by meeting the market, and partly it's because it's hard to know when you're pre-revenue if the market's going to adopt anything related to what the business is doing. So we want to see some early signs of validation, and sometimes that'll come from looking for other signals as well. But we're not talking about a business that needs to be generating significant. So we'll be looking at businesses that have an idea of how the business model should function. People talk a lot about making sure that the business model at its core, if you're putting money to work in the business, it's going to generate some sort of profitable economics, not at the enterprise level necessarily, but at the unit level, and making sure that the business is financially viable. But we don't necessarily want to say that it's gotten to a point where there's a, quote, product market fit or that the business has profit, but really that they have a clear set of assumptions. They've had demonstrated progress to validate those assumptions, and they've met the market, they've generated revenue, and they have a clear idea of where they're going to go. And then part of our thesis is around what we would call, regardless of who you're talking to in the impact investing space, people will refer to the capital gap. And that's generally speaking anything related to funding in an ecosystem where there's not enough capital to fund all of the startups. Another way to put it, the way I like to think about it, I'm based in Chicago, but when, for example, I was just earlier this month, I was in Kenya and Uganda, and in March, I was in Kenya, Rwanda, and Tanzania. And when we're looking at businesses in those areas, it's like if I were to pick up a business from Nairobi and move it to Chicago, I would be able to find investors for that company at the early stage. And if I can't find those types of investors in Nairobi, that's sort of the hallmark of what I would consider the capital gap. Now, obviously, a business that's successful in Nairobi might not be successful in Chicago and vice versa. But that's sort of the thought experiment that I would apply to what is the capital gap and why does it exist? There's just not enough capital. And so we look for companies where that's the case. And so when we think about our impact as investors, the businesses that we invest in are providing access to basic goods and services. They have an impact on those communities. Our impact comes from funding a business that wouldn't otherwise get funded if it weren't for us, or that we bring something to the table that would help them be successful if it weren't for us. Sometimes because we play in what I would say maybe is the earliest of the capital gaps, because there are several along sort of the funding pipeline, but we're looking at kind of what I would say is the seed or pre-seed stage. Some people refer to that as like the pioneer gap. It's sort of the space where you'd find in a traditional, more established ecosystem. Angel investors are funding businesses at that level, maybe angel groups, maybe micro funds or early seed funds. And those tend not to exist quite as well established in, say, East Africa as a region generally. And though the Indian market has definitely taken off, there's still certainly a capital gap or a pioneer gap in those respects.
So impact investing is continuing to grow by leaps and bounds, but tends to be in the eye of the beholder as to what it actually is. Can you tell us how you define impact investing?
Yeah, for sure. Generally speaking, impact investing, I think, is, like you said, it's in the eye of the beholder, and it would be where an investor is investing financial capital for financial returns, but not just financial returns, and has an intent behind their investment to also generate some type of social impact. And what that social impact is, how it's defined, how they balance positive impacts and negative impacts, for example, is what that investor has to kind of sort of decide on their own. Obviously, we look at impact investing through the lens of our investment thesis and our portfolio. And so we look at specific geographies and sectors, but I wouldn't necessarily limit impact investing to what we do. Certainly, There's lots of great impact investors and social enterprises that are focused on doing things domestically in the US or in Europe or other parts of sort of the African continent, certainly, or Asia. And that those are just as much impact investing or not. But the key thing is that you're trying to achieve both financial returns and social impact at the same time with an intent to do both. And I would say that's sort of the hallmark of impact investing.
Well, it continues to grow. How is the landscape changing for investments in impact investing? Where do you see it going?
Yeah, it's a great question. It's definitely changing. We're seeing a lot of activity along sort of various stages. I think what's heartening for us to a certain extent is we're seeing investors come in a little bit later on in the funding cycle. So maybe some of the larger seed or post-seed Series A type funds, which is great because where we play, we need those types of investors to take our companies forward. It'd be great to see more investors playing at kind of the angel or pre-seed stage like we do, but we're seeing, I would say, less of that. And then certainly sort of the mainstream or more retail market, which some people might say is not necessarily impact investing, but more socially responsible investing, kind of in the public equities markets or ESG, environmental, social, and governance. That's certainly an area that's taken off tremendously. If you Google impact investing trends or market, you'll probably see reports from financial institutions talking about all the billions of dollars or trillions of dollars into the space. I'm not sure I necessarily buy all of those numbers, but there's certainly, like you said, tremendous activity. And I think the market, where it's going, it'll be interesting to see. I think that as more awareness drives interest and hopefully the interest drives activity and the activity drives engagement, as sort of people more at the retail level are interested in understanding companies' footprint as a corporate citizen within their community, what sort of social impact they have, both positive and negative, trends towards metrics around sustainability and such. I definitely think it'll be positive for the market as a whole. Obviously, there's always growing pains, but I think it has the possibility that maybe not in 5 years, but perhaps in 10, and I would say certainly in 20, that this part of the conversation won't necessarily be a separate part of the conversation. It'll just be part of the conversation. And that people will look at businesses and want to understand how they behave beyond just sort of providing profit to shareholders. And it's happening at the retail level. It's happening in terms of direct investing. It's also happening in terms of legal structures. The trend for benefit corporations has certainly taken off. I was a bit of a skeptical, kind of wearing my legal or lawyer hat. I certainly had conversations with people saying, I'm not sure you necessarily want to be a benefit corp. They're unproven and we don't know how they're going to play out. But that sort of thinking has really kind of fallen by the wayside, as people have said, we're willing to tolerate these risks, and investors as a result have said, we're going to throw our lot in with entrepreneurs who want to move in that direction. And I was just reading something the other day about how the state of Delaware in the US is now thinking about extending the concept of public benefit corporations or public benefit purpose to limited liability companies. So structurally, kind of the legal structures are presenting themselves. And I think that's all positive for the market. And I think it's going to be something that, like I said, longer term is just going to be part of the whole and not necessarily something that's separate that has to be viewed in isolation.
Well, from an investing point of view, if I look at a tech deal, the two major risks are the technology doesn't work or it's not adopted widely. What are the risks in an impact investing deal that you see out there?
Yeah, so some people, let me sort of answer that by talking about something slightly different. Sometimes people will say, is impact investing harder than regular investing? And I think to answer your question, you have to deal with all the risks of a traditional investment, and then you got to think about these other things. Now, does that make it harder? I don't know that there's an answer to that question. Every investment decision is different. But yeah, I mean, you have to think about the other questions around the edge of adoption, right? So for example, if I'm thinking about a new technology product and I'm thinking about more of an established market like the US, there's lots of questions around consumer adoption and things like that. But if you think about that in another geography, in an emerging market, for example, then you have different questions, different things to think about, things related to, say, cultural norms that might have sort of different nuances that you wouldn't necessarily expect. Now, the key is if you're in the market and you understand what those are, then it's just the same evaluation. That's why I would say sometimes impact investing isn't necessarily harder. You just have to have a different set of knowledge. So using an example of a business we invested in Rwanda that's called Kasha, It's sort of last mile distribution of women's hygiene and sanitation products. They've sort of moved into some other products and also for men as well, more recently as they've grown, and they're now expanding into Kenya. But their key insight was that in Rwanda, women didn't necessarily, and it wasn't necessarily strictly on like household income lines, and said that, people who make a certain amount don't have access. It was actually across socioeconomic lines, because what happens is in certain communities, there's just a cultural norm that you don't feel comfortable as a woman going into the local shop to be able to buy hygiene products, in particular, say, post-pregnancy related products that relate to women's hygiene. And so people weren't getting it and didn't have access to it because of that cultural issue. And so that's just something that you have to know. And once you know that, and once you have that insight, you can build a business that's focused on solving that problem. So I would say it's all the same, kind of back to your original question, all the questions you have to answer in terms of a regular investment, you have to answer in the context of an impact investment. But the nature of the business sort of often takes those questions in a different direction. Certainly those can be geographic based, cultural based. It could be market size. So one question that we think about as we look at a business in Rwanda, for example, is what does that market look like, right? And where can that market expand? And if the business is going to expand from Rwanda to Kenya, can that business that has that insight into the market in Rwanda, will that insight hold if you expand to Nairobi? And does the market size that you have within East Africa hold up to, say, the market size you might have in the US? So it's the same questions. The types of things that make it a little bit trickier, I would say, are when you're looking at the impact component and you want to think about how do you gather and collect information, how do you monitor and evaluate the impact that a business has, or that your investment could have. That's where you have to do some additional legwork. But these days, there's lots of opportunity for people to pull from existing metrics and work that's done in the past, along with work that people are doing presently, or people coming up with sort of proprietary methods of figuring that stuff out that oftentimes people are willing to share because the market's pretty collaborative. So that's where there's an additional thing to perhaps do. But I wouldn't really say that makes it harder. It's just a different focus in terms of data collection.
So your fund focuses on India and East Africa. So why East Africa? Why is that a target area for you?
Yeah, that principally goes back to the founders of Beyond Capital having family ties to the region. And in particular, our CEO, Eva Yazari's family has a history specifically in Tanzania. So that's sort of, I think, what prompted maybe the original interest. And then when I joined in, so they started the organization in 2009. I joined at the end of 2010. And one of the things I did, they had just put money to work, and I had mentioned earlier a water distribution business in India, and said, okay, we want to do this more. We want to figure out how to build an organization. And so I joined then to help build the organization. And so one of the things I did was, as we were crafting our investment thesis, I said, all right, well, let's look at this from the perspective of kind of like a matrix as far as geographies and sectors, and say, where do we have existing knowledge? Where do we have existing networks? And where do we want to develop greater knowledge and greater networks? And where do we see opportunity? So maybe not quite a matrix, but just a number of different dimensions or criteria. And we evaluated various regions and sectors. And obviously with the history with East Africa and Tanzania in particular, that kind of gave that a head start as far as the analysis. And India was sort of comparable, similar. So that's sort of where we sort of landed. And it was kind of a joint effort to kind of put that together and then say, look, we can't invest everywhere. If we try to invest everywhere and everything, we won't do any of that well. So really trying to focus in on a couple of specific regions.
And so how does East Africa compare to the other sectors that are out there, and where do you think it will go in the long term to achieve success?
I think I was talking recently about I'll sort of answer this in kind of a roundabout way. I was talking to some folks about the Indian startup ecosystem, and some people were talking about the general consensus emerging that 2015 might have been an inflection point for the Indian market, where prior to that capital was in short supply, entrepreneurs were emerging and maturing, but I wouldn't necessarily say there was quite the critical mass that there is now, and that 2015, for whatever reason, wound up being kind of that inflection point where it really took off. And I think there's a lot of merit to that thinking. I would say, to answer your question, I'd say the East African region, and Nairobi in particular, is maybe hitting that inflection point now. We've been, our first investment in the region was in 2012. it was a few years before we put more money to work in East Africa and actually did more investing in India for a few years. But then we've got somebody based in Nairobi full time. And over the last couple of years, we've seen activity really, really take off. Last year, I think we did 4 investments. We're about to, I think, close maybe 2 more. We've got follow-on capital that we're about to deploy into another one. So from our sort of perspective, things couldn't be more active right now. And it just seems like it's moving more in that direction. We're also talking to people pretty regularly about their other investors, their portfolios, people who are a bit earlier in the funding pipeline than we are, people who are a little bit later, finding opportunities to co-invest and sharing notes. When I was in Uganda a couple of weeks ago, I had a meeting in Kampala with a new fund that's going to be kind of the first locally domiciled impact investment fund in Kampala, in Uganda more generally. And then we also met with the Ugandan Investment Authority, who could not be more excited about what the market in Uganda is doing for startups. And it's really impressive in a short period of time what they've been able to do in terms of putting together some infrastructure and be incredibly supportive of new businesses, entrepreneurs, and investors. And so I think that's all really promising. I think that with anything, when a market gets really hot, investors bid prices up. And so I think then there's sort of, I wouldn't say a cooling off period, but some investors pull back and as other investors are coming in. And I think that's good for the region as a whole. It's, nice for us because we're not focused primarily on Nairobi. We look at the region as a whole. And so I think that's going to drive interest from Nairobi to other areas, Kampala and Kigali and Dar es Salaam, where we've invested. And we think that the more investors that are looking at the region as a whole, the better. And a lot of the businesses will find opportunities to expand across the region as they find better strategic partners and collaborators and other startups and others that they can collaborate with. So I think it's all really great. And I think what's challenge will always be capital. It's one of the guys on my team likes to talk about no money, no mission. So you need capital to make it all work. But we're seeing more and more capital come into the market, and we're seeing people make good use of that. And so it's all looking very promising.
That's great. Well, in the last minute or two that we have left for today's interview, what else should we cover that we haven't?
Well, I think maybe the one thing to mention is just people always ask, how can they get involved? What can they do? How can they explore more of an interest? And obviously, Beyond Capital Fund, we like to be a resource. So certainly go into the Beyond Capital website. We're out and about and always happy to talk to people. Our organization has actually got people all across the world. So not only in Chicago, where I'm based, or in East Africa or India, where we have people on the ground, but also in Europe and in Switzerland and London and the US and Chicago, DC, New York, Dallas, LA. So if people are interested, they're likely to find somebody near them from our team. So certainly feel free to reach out. And because impact investing tends to be a bit more globally focused, I think that's not just restricted to us, but if somebody's somewhere and they say, I'm really interested or keen to get involved in impact investing, all they got to do is probably Google kind of impact investing in their local area, and hopefully they'll find investors, groups, conferences, events, convening. Seems like all the time I'm getting emails from people about gathering people together, having a coffee here or there, or grabbing lunch. I think people are very interested to learn and collaborate and work together. So I think the first thing to do if you're interested in getting involved is just looking for who's around and how they can get in touch. So I'd certainly encourage people to do that, and just seeing what companies are out there and finding out ways to get involved with them and help.
Well, that's great. So how best for the audience to get back in touch with you?
Well, certainly if they're interested in contacting me via LinkedIn is a good way, or my contact information I think is on our website, but it's just brian@beyondcapitalfund.org. So feel free to send an email. And obviously, if anybody's in Chicago, I'm always happy to connect in person and find out ways that I can help the Chicago ecosystem take off the ground and do that. So certainly reaching out any way that makes sense to them is good.
Well, that's great. Well, thank you for taking time to share that with us today, and hope to have you back for a follow-up to see how things are going, and appreciate the information.
Absolutely. You can count on it. Thanks again for having me.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.